welcome to another edition of the C Today Business. We're going to have a talk show, but before that, let's take at the market performance from Indonesia. The Indonesia Stock Exchange rose by 0.46% to close at 68.44 at the end of the second trading session on Thursday. During the session, 282 stocks advanced, 239 declined, and 212 remained unchanged. The day's trading activity recorded a total transaction value of approximately 10 trillion rupiah, with 16 billion shares changing hands in 1.3 million transactions. Now, moving on to Singapore, the decision overnight by the Federal Reserve to hike United States rates spooked Wall Street, but local in Singapore share defied the gloom to inch up on Thursday. The benchmark Straits Times Index rose 7.17 point or 0.2% to 3269, tracking the performance in regional markets, which mostly ended flat on or higher. Gainer outnumbered decliner 1292-272 after 0.2 billion shares worth 890 billion US dollars were traded. Now elsewhere, the Shanghai Composite added 0.8% and Hong Kong's Hang Seng rose 1.3%, while South Korea's Kospi ended little change. Australian stocks also closed flat, with most sectors in the black, which offset big hits to the local banks. The US Fed hikes rate, of course, is the highlight with the 25 basis points on Wednesday, but also signaled that a pause may be imminent. However, Wall Street slipped, and comment by the Fed Chair Jerome Powell deemed investor hope of an imminent rate cut. Despite the positive performance, investors expressed disappointment towards the Fed's lack of signals for imminent interest rate cut. Powell hinted the end of the interest rate hikes was at sight. It is noteworthy that since March last year, the Fed has raised interest rates 10 times in response to soaring US inflation, bringing the current interest rate to the highest level in 12 years since 2006. And now, of course, with that, we will talk with Sukor Sekuritas Online Trading Head, Daniel Wiguna, and find out about the effects on the Fed's interest rate decision on the Indonesian economy. Good morning, Daniel. Thank you for being on the show again.
Sure.
I mean, it's kind of expected, 25 points, and it's been happening, and then this is 10 times, and then we see it last week. We kind of forecast. Well, you forecasted. You mentioned.
We forecasted like 3 weeks ago, and it happens. But we expect that. We expect that rate hike. But what we don't expect is what Jerome Powell said.
That
yesterday night, he said that there will be no dovish movement at the end. Okay, so this is what we don't expect, because after that we see like their capital market, their capital market response is really like responding in a panic way. A lot of investors like do their panic selling on stocks, especially on tech stocks. Because if they are not cutting rates or maybe they're just going on sideways, it will be a disaster for most of their industry. Maybe we can see by the data.
Okay, so if we open up the data, so let's go back like the past year. They've been raising it.
It's 10 times.
10 times. This is quite this is unusual, right? Or is it something that's been done?
This has never been done. The 10 times never been done. The rate hikes ever been done. Like the last time is in 2006, before they got their subprime mortgage rate crisis in 2008.
Right.
And then in 2008, they're like after then they're lowering their interest rate. But before then, in 2006, they got like 6% of interest rate at that moment, and it's like we see it as super high at that moment. And then we see that what Jerome Powell said at last 2 days, if they are not doing like cutting, or they are not cutting rates, if they are not cutting rates, this might signal negatively to their maybe in their housing industries.
Oh, it's going to affect the housing industry, not
because
just the banking itself.
Because if the interest rate is super high, then a lot of people like don't have the appetite to buy more house, right? Or they will find a lot of hard times to like paying their mortgage rate
Okay.
because the mortgage rate is also raising.
So before we go to
yeah.
mortgage, let's see how the markets.
Yeah, this is
the
their
Nasdaq,
markets.
S&P,
Yeah.
and the Dow
Well,
yesterday.
you see, this is when this part when there is a spike in three of their index.
Okay.
They are waiting. They are waiting for what Jerome Powell
Gonna
will
do.
said. Yeah, going to do after then. And when Jerome Powell said that there will no dovish movement in the meantime, we see that there's a lot of correction both in Nasdaq, S&P, and also in Dow Jones.
Yeah.
Yeah, it will be usually when interest rate is high. Usually their market is going on like rally also, but this time is like different. As you can, as you said before that. This kind of things is never happen. Yeah, usually when interest rate high, the stock is also like responding in good condition, good situation. But now it's like, well, as we can see, they're responding it in really, really negative way.
It was interesting when you mentioned that it's gonna affect the mortgage company too, because like people's gonna stop buying houses. I mean the interest rates doesn't really affect the housing market, but at the same time it very much affected banking. And then we see what happened 3 weeks ago, and what happened just this week. The First Republic. I mean, the interest rate affecting banks so much, and like the regional bank is not doing so well. We have a graphics of like what happened in this week. First Republic's been taken over by JP Morgan, which already take over. I remember like 2008, if I'm not mistaken, JP Morgan joined with Chase to take over Washington Mutual, which is one of the biggest one that fell in the U.S. history. Now we're seeing numbers of banks going down with such a huge amount of money. So if we can go to the next slide, we have the bank.
Yeah, we have the bank failure data. As you mentioned before, Washington Mutual Bank on the subprime mortgage crisis, September 2008. What we are seeing right now in May is the First Republic Bank, which JP Morgan made it to like buy some of their assets in a really, really like modest, they called it, in a like modest price. Because as you can see, First Republic Bank have like 229 billion in assets. And JP Morgan made it to buy some of their assets with the price of around $10 billion. For some of their assets, not all of their assets.
I thought there was like a discount right there.
There is a discount in some assets, mostly in the bond asset, and they got like profit. They also said that they got like modest profit, around 2.6 billion. 2.6 billion dollar. So yeah, this kind of things is we see like maybe this is 2023 new normal in banking in the US, because we see also the Silicon Valley Bank like got bailed out a few months ago, and also in March 2023 we see the Signature Bank in New York also like have that bank failures event. And maybe until in the end of 2023 we will see like a lot of this kind of data coming up. So yeah, we don't hope that this kind of things continue to happen, because also it will affect a lot of things, a lot of sectors, not in the US only, but in global market also.
Right. I mean, it's interesting when JP Morgan said like, now the banking is doing okay, but at the same time, it looks like the regional banks, like, is there a future for regional banks with like with this continuous interest rate? And like, if we just look at the money, it doesn't, for me, it doesn't even make sense anymore to have a regional bank for the US at least. I don't know.
Yes.
Well,
I quite maybe their regulation is quite complicated, but let's see more to our domestic market, our banking. The most question that been asked is like, will this kind of things happen to our domestic market, right? So if we see, I think this kind of things, this bank failure in the US, I think will not affect banking in Indonesia, because we're doing just fine.
So the banking system in Indonesia is gonna be most likely not being affected, but what's happening by the regional banks in the U.S. with all the buyout and everything like that. But but with the new federal rate and like everything's going on in the U.S., how does it affecting the local market?
In the local market, we see that well, after the bank failures in Indonesia, we hope this is we see that this is two different things.
Okay.
Yeah, because bank failures in the U.S. is one thing,
Okay.
and it affects a lot of their economy based on it's because of the Fed keep raising rates, but it also like a good thing for our domestic market actually.
Good.
Because our domestic market, as we can see on the data, our GDP annual growth rate is the last time. This is what we project. In last year for full year we grow like 5.01%, and in the first quarter we projected that there will be like small correction, maybe small correction in the growth. Maybe we projected our GDP quarterly growth will be on 4.95%.
4.9%.
Yes,
Okay.
that's what we projected. But it's still a good number because at the end of the year, our finance minister, Sri Mulyani, said that she projected our full year GDP growth rate will be 5 to 5.3%.
Oh, that's still
So this
good.
is a
5
good
to
projection.
5.3%.
From this data, from these two different data, we can see that whatever happened in the US, their banking failures, their sector movement, and all of the things that happened, their interest rate, I think have only small impact to our domestic market. Yeah, we are so thankful for our commodity price that is raising, of course, and our current account surplus data that is still on surplus condition. Our trade balance with which still surplus also, and this indicates like a growing projection for our market. We also see that our PMI data, like few days ago, our purchasing manufacturers index is like on expansion mode, which is 52.7, if I'm not mistaken, 52.7 level, which indicates where our manufacturing industry is still growing. It's different than in the US. In the US, their PMI data is below 50, which indicates they are on like they are not growing, they are not expanding.
Are they halting? Are they waiting?
No, it's just not growing because it's hard for them to grow when the interest rate is high.
It's high. Oh,
Yeah,
so
yeah.
nobody.
Nobody.
Money.
Yeah, as we can say, this is like some credit crunch event.
Okay.
Yeah, in the US, nobody wants to borrow money from the banks, which is different from our market.
Yes.
In our market, our credit is growing. Our rupiah level is not in a too strong condition, which indicates investor just if they want to switch to our domestic market, now is a good time.
Okay.
Yeah.
Now we have the Indonesian Stock Exchange Index here. Let's take a look at how the projection.
This is interesting because last week we projected our domestic market can hit 7,000.
Yes.
But our projection is miss a little bit because the level that we touched last week is 6,960, around that area. 7,000 is really like a strong resistance for our domestic market, and because of what the Fed said in our in global market, we got slight correction. As we can see after the Fed announced, we see that our market is already priced in. So in technical condition, we see that this three red candle
right here.
Yes.
Okay.
Right here is three black crows pattern, which indicates there will be a continuous correction in our domestic market. Yesterday, we see that there is like a small green candle over there, some optimism from investor, but I assume or we project that maybe today, if our market open and the trading time is open at the end of the week, maybe we can get like a slight correction to our support level, maybe in 6,800.
It's around here, like
Yeah,
6,800.
it's around there. Yeah, maybe.
Okay.
And this is like the support line also, which guide the investor to see that in the meantime, maybe our market will move in this area, in this support area, and their strong support will be on 6,757.
Now, May is known to be May sell, so
Yeah. Sell in May and go away. What people will say.
So are we seeing this? It's gonna be around this
Yes,
line right here?
if it happens, which we see that the market is already like priced in to whatever the Fed said. What we are waiting is today there will be like a GDP growth data announcement. Maybe there will be a slight market shake today, but sell in May and go away will happen on this line, on this support line, and the strong support will be on. We see it through Fibonacci indicators. In Fibonacci 0.5, this part will be the strong support.
57.
Yes.
67,
57 going to be the strong support.
Now you mentioned last week something about the commodities. Like the price was going up last week, but like we don't know if it's gonna hold up. So let's see the graphics on how the commodities doing. So
on the commodities and also the sectoral movement.
Right.
that we can.
So if we can see the other graphic on commodities. Now this is kind of interesting because the market is just not that
well this week, as last week.
So go ahead.
See, as we mentioned last week, the technology sector is still on correction because maybe following the fight from the US, if the interest rate is still high, well, technology sector will be finding a hard time to pay their debt. So maybe our domestic market following the trend from the technology sector in the US. That's why there is no like good sentiment for technology sector. Transportation, last week we see that they're growing really high.
Really well,
this week maybe they got like profit taking from the investor, but only a slight correction.
Right.
Finance also, because a lot of finance stocks already got a lot of positive. Maybe they grow like really fast and they grow really high, like for the last month maybe. That's why there's a lot of investors still do profit taking on them.
Okay.
But we will see about today, because usually when the Fed raising their rates, usually Indonesia also following their movement. Indonesia also maybe following to raising rates. But we project maybe for this time, in this last May, there will be announcement from Indonesian Central Bank, and the projection is we will not raising rates.
Are we gonna cut it, or are we gonna stay at
the projection? Yeah, the projection said that the forecast said that we will just stay on our level now.
Okay.
5.75%. So we got like around 50 basis point different from the US, the US interest rate. So health also still in correction. Basic industry and industrial sector also, and energy sector, as we can see,
minus 5.17.
5.17%, because a lot of people do like panic selling on energy sector. They see that the coal price is lowering down every week. They see like also oil price lowering down. Also they see like nickel price, but the only one that is not in correction is gold. Because
we're actually seeing another high.
All-time high, $2,060 per troy ounce. Maybe the least stocks that we can buy, that we can hold on, is stocks that related to gold.
Oh, okay.
Yeah.
Well,
on energy, but
I got my
disclaimer on. And the non-cyclical is the highest. Cyclical is the second, 0.75. property also we can look on for next
property.
week. Yeah, because a lot of like we say a lot of undervalued stock is is there in property and also infrastructure. There is no movement and there is no good sentiment also. It's just like neutral.
Okay.
So what we can look on for next week is the property and the cyclical part.
Oh,
The second and
so,
the third
so there's still
sector.
chances on the property and cyclicals to actually
Yeah.
continue goes up. And then on this one, well, people already panic selling on energy.
Yeah.
So
But we can look on some oil stocks in energy because they like got a lot of correction. Usually there will be a small technical rebound.
and then it's gonna
Yeah.
go up a little bit. Oh, well, that would be nice. Well, thank you so much, Daniel, for being here today. And it's nice to see. And then we'll see again probably in a couple of weeks. We'll see what's
Sure,
going
sure,
on
sure.
with what happened with the Fed. Like, is the money gonna come in Indonesia? And then of course we're gonna see how the ASEAN summit's gonna play out for the local economy.
Looking forward for it.
All right. Well, after the break, we will have an update from around the world. So stay here with us on C Morning Show only on C Today.